Hello, Brett Ellis with the Ellis team at Keller Williams down here in sunny Southwest Florida. It is Thursday, May 7th, 2026. Latest current market index and luxury market index numbers are out. The market spread index is coming out tomorrow, so stay tuned for that. But we've got a couple things going on here. The current market index is moving and not necessarily in the best direction. So it's rising, which is better news for buyers and less good news for sellers. Now, all along we've been talking about this is coming down, but I think what is happening is a couple things. One, we're out of season, but that doesn't mean a whole lot. Number two, maybe the effects of the Iran war and high interest rates and high oil is taking its toll, and that's one of the things we were concerned about. Now, we're always a day or two or a week away from this thing being over, being finished, and the markets get excited, then they come back down, get excited, come back down. But real estate buyers, they're watching the mortgage rates. Now, we are seeing some rates. Like, I was just pricing out a rehab loan on a house where you could buy a house and then put the cost of a new roof in, and it's surprisingly inexpensive. I couldn't believe the rates on that. But back to what I was talking about. Rates are higher than what we were expecting they might be because of the effects of inflation, price of oil mainly, the war and that sort of thing. So it's taking its toll on the current market index. Let's move over to the luxury market index and see if that is true. By the way, you can find all of this info at topagent.com. So we're going to the luxury market index, and what we're seeing here is it went up to 4.82 from 4.68. It's always going to run a little higher than the current market index, so we're not concerned about that. But it went up 14 100ths, where the other one only went up 2 or 3 100ths. So it's not good for sellers. It's not horrible, but it's not good for sellers. It's better for buyers. You just got a little gift handed to you. Now, I want to head over, because here's where the economy is. Let's head on over to the market spread index. And I'm noticing some interesting things going on in this market. Now, this is not tomorrow's numbers. I don't have those yet. But the market spread index is coming down. I like to call that the gap. That's the gap between the active listings and the pending listings. And as you see that gap narrow, we've made our own graph that just shows what that number looks like. What's the difference? And we expect when those numbers are released tomorrow, it's going to come down again. But you might say, how? Because the current market index and the luxury market index are going in the wrong direction. So how is it that that's getting better? And pendings are still strong, just not as strong as they were. But here's what I think is happening. We had a lot of closings, end of April, early May. So that's taking inventory out of the market. I also think, and I can't prove it, but what I think is, a lot of sellers are taking their homes off the market. They expired at the end of April and they have not relisted yet. Now, some of those probably won't relist until October. They gave up, said, hey, season didn't give me what I was looking for. We know median home prices are down 4%. We also know average prices are down 4.6%. Some sellers don't want to play that game. They were expecting lower interest rates, more sales, which we have. We've got the third best year on record going here in 2026. But then we ran into the Iran war and we ran into high oil prices. Now that could all flip in a day or two or a week. Like I said earlier, we don't know, but it hasn't flipped yet. So right now we've got oil at about $94, $95 a barrel. That's still pretty high when you put it at what it was, around $60 a barrel. It's less than the 112, 115 we were seeing, but still, it's 94, 95. So we want to get a grasp on that. We want interest rates to come down a little bit, and I think that will translate to a better real estate market if the economy isn't wrecked. If we don't do too much damage to the economy, sorting this whole thing out. So that's the wild cards we're looking at. Got a lot going on, but I did want to point out the change in that current market index and the luxury market index, because we were doing so good. Those are future indicators of future price. We call that a forward-looking indicator. And they've turned on us a little bit. So now, one or two don't make a trend. We're going to continue to watch it every week. But let's just get this war over with. Let's get these oil prices down, and let's get on with the real estate market going, because we were doing pretty good there. And I'd like to get back to that if we can. I understand I'm not in control of any of that. You aren't in control of it. But in a perfect world, that'd be fun, wouldn't it? So that's what we're tracking in the Southwest Florida real estate market on May 7th, 2026.
The Ellis team at Keller Williams is a family affair. Always call the Ellis.